All right, Merry Christmas, Happy Holidays, and upcoming New Year's when this is being uploaded on Friday. I hope you guys had a great holiday and that you guys are going into the new year looking for more returns on your portfolio, but of course, having fun times with your family or your loved ones and just enjoying your time. Hope you guys had a good Christmas, a good holiday time, and hopefully your New Year's turns out to be a great time, a great night, and the New Year's even better. So for this video, we're going to be doing a review of my overall portfolio. We're going to be going over my portfolio, my earnings, my yearly returns, such as options, dividends, and just my overall portfolio. Just doing a year review for myself and for you guys as well to see where I have gone in this past year. So let's go ahead and get straight into it. This is my portfolio. All right. At the moment, I am standing at 38.191K or 38,191. I don't know why I'm making it complicated. As you guys can see, just from looking at the portfolio from a base view, year to date, we are up 36.58%, which is quite a good return of 10,229.72, obviously beating the overall market of the S&P 500, which I am proud to say we were able to achieve this year. Now, let's just go over my holdings because, why not? Let's see what is happening on my account. So as you can see on the right side, we're going to look at the options first. Aurora Cannabis, this was a play that I did roughly a year and a half ago. I just did a long play. Maybe it was going to pop off. Maybe it was going to go somewhere. Ended up not going anywhere. It's going to expire worthless. I'm going to lose my money, but it's fine. It was just a, out of their play. I was getting into options, seeing what I could do, and it did not go right. We have RIOT. We have my RIOT $20 contract call, which I am doing now on a monthly basis because I want to, have a little bit of calm time, focus on other things. So I'm doing monthly basis contracts, as you guys saw in the last video. And this one is going decently well. RIOT is standing at a steady $17, $18 rate. Of course, if it gets to the $20 contract, I don't mind it. I don't mind selling RIOT for a $20 price because that would be a good gain for me, which we'll get to in a second. Of course, we have the put as well since we run the wheel strategy on RIOT. So we have 4 contracts on the puts, which are also doing quite well. We also have a long play. This is a long play on UPRO, which is just a leveraged S&P 500 ETF. And we have a long play. I've actually done 2 rolls on this ETF. As you can see, if we could go down, it was a 1 roll. So we rolled up. We actually had another contract on this same thing that we sold for break even, so I could go ahead and play it on another strategy. But these 2 contracts we are still holding. As you can see, I rolled for $600 profit. I tried rolling again, but then I decided not to after not being able to get the price that I wanted. So that is that. But this is overall just a long play. As you can see, we have a big amount of my portfolio into it. And I do think that with the growth of the S&P 500, this could be pretty profitable. As it is now at the moment, we're up $320 or 6.8%. So it's doing pretty well. Moving on to the stocks. As you can see, RIOT, our option wheel strategy. For RIOT, we are holding 901 shares. The portfolio diversity is really high because this is the main strategy I'm running. And we're up 20%. With the average cost being $14.45. Like I said, I wouldn't mind selling it at $20 per contract because that would bring me a good amount of income. I'm pretty sure it would bring me, with the option income, it would bring me to $5,000 made of total return, which I definitely do not mind. We have STAG, which is a long play. As you guys may or may not know, I used to trade very easy. I wouldn't take risks. So I traded stocks like this in ETFs, like STAG, where this is just a dividend income stock mostly. It pays out a 3.78% dividend, and it has a pretty good return on growth as well. Of course, taking a dip as the whole market did, but pretty good stock. We have DGRW, another long-term play. As you guys might see these on my monthly updates, these are just some of the ETFs that pay me a small amount of dividends. We have Maine. As you can see, they're all up because the market is up, and I did buy these when the market was down, so of course our average value of stocks is pretty low, meaning I am able to gain at the moment. We have SCHH, which is still down. RIVM or RITM, which is actually one of my favorite REITs. Actually, they pay a good dividend. Where's the dividend? It's a 9.07. It was at 14.11 at some point, but at the moment it's a little bit dipped. But it still pays a good dividend, and it is decently growing. As you can see, it dipped during this period of the pandemic, and then it bounced back up a little bit, and it's still going as it is. We have DHS, also up, another ETF, SPHD, HTGC. This is just a free stock I got when I signed up for Robinhood. We have OHI, EFC, and then finally we have the YieldMax ETFs, which is we have TSLY. TSLY, we are at 616 shares. We're down at the moment, but TSLY is heading up. They're doing pretty well with it with the contracts. We're above what we were when the dividend payout happened in December. So we're above that. So that means if we get the same dividend payout paid out, we would still be in the positive if you bought down here. So technically, the ETF is heading up in growth, beating its dividend payout, meaning overall you will not be down if this trajectory continues. Of course, all depends on what contracts they do, but we are up on TSLY. Well, not up, but we are heading towards the positive side, and hopefully it keeps going that way. With APLY, I bought a couple more shares in APLY recently, and we are down. We are down for a little bit, but this is more of a long-term play because APLY is not that volatile, and I don't mind holding APLY because it will grow with Apple, the underlying, as well as pay me a dividend, which I do not mind as long as the growth outpaces the dividend. Then we have AMZY. Once again, I bought more shares of this as well. Another long-term YieldMax play because I do believe in the underlying that it will continue growing and it will outpace the dividend payment. And as so far it has by almost 5% at $182 return. Of course, we have the big one, CONY. CONY ETF is growing really fast. We're at almost 40% return at $481, and it is growing, as is Bitcoin and as is RIOT, which is my, a covered call or option wheel strategy stock, because Bitcoin is growing. So are all these other stocks and plays, right? Makes sense. And lastly, we have GOOY. So GOOY is the last stock and the last YieldMax ETF, which is the new one that I've started to put in some money into. Once again, another long-term play. As you can see, it has been on the down trajectory, but it seems like this is because of the dividends that were being paid out, or maybe not. But it has been on a downward trajectory. I did try and time it and buying it here. As you can see, I did not do the best job. I think I bought roughly up here. So anyways, it hopefully heads towards the top side, with Google hopefully going up towards that side as well and paying me some decent dividends on the way up. Like I said, long-term play because the underlyings are pretty good. They're not volatile like Tesla or CONY or Tesla and Coinbase. So I wouldn't mind holding them long-term because I know they will continue to grow and continue to provide a decent growth and a decent dividend, which I don't risk. I don't have much risk as in I would if I was holding Tesla or CONY. So those are my stocks holding coming into 2023, going into 2024. Not that big of a portfolio as many other people have. How many stocks is this? Or ETFs? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 17 stocks and ETFs that I'm holding, with 4 open contract positions, with this one expiring next year. And these 3 being my long-term plays, 2, the puts and the calls for the option wheel strategy being my income, and then the UPRO being the long-term play. So with that said, we could also look at my spreadsheet real quick. Just made this real quick to demonstrate how much we've made since we've been keeping track. So the income made from dividends and options since keeping track of it, which started in August with the monthly updates on the videos, In August, we made a measly 163.55, which is when we were still playing it a little bit soft, a little bit easy, and a little bit, tame on the risk side for dividends and for options. No options at that time, just dividends. So we got 163. In September, we stepped it up a little bit, and we started buying. What did we buy? Oh, we bought YieldMax ETFs, and we got a payment of $346. In October, we started playing the option wheel strategy. We started going ham at the option wheel strategy on RIOT, and as well as putting more income into YieldMax ETFs, therefore getting a payment of $1,247. In November, we got our peak, the highest yet, of $1,601.04. And in December, since December is not over just yet, we still have dividends that are going to be paid out, as well as some Christmas bonuses, maybe, and options contracts that are not expired just yet. We're going to be getting a December payout of maybe roughly $1,600 or more, with a total of for 2023 coming out to almost $5,000, but not just quite, maybe $2 off, coming into $4,957.96. Meaning from our overall growth year to date, these dividends and options contributed roughly 50% to that growth. So everything else came from stock growth and appreciation, and the other 50% came just from dividends and options. So as you guys can see, it's been a good year for my portfolio. Of course, we had our lows. We had our very lows. We were down roughly, 12.61%, down to 24, and now we're back up to 38. So that's just how the market is. You have to play it out. During this whole downturn that we were going through, I was buying, and dollar cost averaging is obviously the best thing you could do. Of course, dollar cost averaging, you could do that to YieldMax ETFs if you want to be a little risky. If you want to be a little bit easy and not take much as risk, you can invest into stocks or REITs like RITM, HTGC, Main Capital, DGRW. These are all quite safe ETFs and stocks to invest for long term and with dividends. And of course, if you want to be a little bit more risky, get more return, you go for YieldMax ETFs. And if you really want to start playing the game, you start doing option wheel strategies. And this is where you get that spike of growth. As you can see, once we went full into YieldMax ETFs, as soon as we went full in to RIOT option wheel strategy, we just exploded towards the upside. And of course, the market also went towards the upside as well. So we got that boost in with it. Now, with 2024 just around the corner, I want to thank you guys so much for subscribing, supporting, and watching these videos. We have many more videos coming for the next year, many more ideas, many more plans and strategies that I'm building, many more update videos on the option wheel strategy. In my account in general. So we will always have videos coming out on my account. We will have videos coming out on YieldMax, new ETFs that they'll be releasing, new ways of looking at new updates, things such as that. But pretty much, thank you everybody for watching. It's been a good year. Maybe not for the market. Most of the market was down for the most of the year. But in the end, it came back up, and we have a pretty good return for this year. And I'm very happy for that return. Of course, I'm still learning. I'm still learning new things about stocks, about options, what to buy, what to sell, what to hold, how it all works, how to use my margin correctly. So yeah, that's been 2023. It's been a good year, and I hope it's been a good year for you guys as well. And if it has not, if it's been a rough year, maybe there's been some issues, I hope 2024 is all the best for everybody. Even if you had a good year in 2023 or a bad year, I hope 2024 is good for all of you. I hope you guys decide to take that leap, if you have not already, to invest into stocks and ETFs and go ahead and start your portfolio. So yes, that has been me. Thank you everybody for watching, and I'll see you guys in the next one. See you in 2024.